Hello everyone, Larry Leverantich for Ichimoku.co with a daily analysis for the S&P 500 for the trading day ending Monday, February 10th, 2014. Well, a continuation of the trend to the upside today, a candle with a higher high and a higher low, and a candle where the buyers have closed with control. This suggests that there is potential for the trend to continue to the upside. White body candle once again in line with the previous two trading days, but if we look at the size of the white body, how it's reduced dramatically, it does raise some doubt about whether this trend will continue to the upside. The white body denotes the buyers making an amount of net progress on the day between the open and the close, and basically it determines net momentum throughout the trading day. And when we have net momentum drying up in such a manner that quickly, it does suggest a very real possibility of a change of trend. With this long shadow on the bottom, it actually represents a potential Japanese candlestick reversal pattern. It's a type of hanging man pattern, and here we have the uptrend in place, the small body and the shadow on the bottom. Not quite a perfect one, but the sentiment is the same with this lessening of the upside momentum. Now that, as I've said, does raise doubt about continuation of the trend, but with all of these potential reversal patterns, we do require confirmation, so we're looking for a lower high and a lower low. Now the only problem here for the sellers is that we have the bottom of the cloud around the low of the current candle that we need to trade through, so it does present a bit of a problem. Even though we have a good indication of a potential change of trend, the sellers will need to be quite strong in this market to take out that previous low to establish that downtrend. Now in line with that happening, however, we do have the round number resistance at 1800 where the market traded to today, closing just at that level. So we know that round numbers tend to be very important areas of support or resistance, and in the recent past we had the market testing to that level and then selling off quite strongly, so there is potential for that to occur. Now if the market does sell off and if we do trade down through the bottom of the cloud, we do have a little window that was opened around the 1775 level, and that really establishes that level as an even stronger level of support than it was previously. And here we can see it had been tested on many occasions in the recent past and will be a strong level that the sellers will need to be very strong to trade down through there if the market is going to trade to lower levels. Just looking quickly at the Fibonacci Retracement, and here we see this weakening in net momentum in the market around the 100% level and the potential candlestick reversal pattern, the hanging man type pattern, and it does set the market up for a potential change of trend. So we will, as I've mentioned, be watching that low very, very closely. In terms of Ichimoku, still a neutral market in the long-term time frame with the market trading within the cloud, and we had seen the market trading within the cloud previously breaking out, and we didn't see any decent follow-through, and markets are behaving, all markets are behaving in that manner. We have had breakouts in some of the currencies and some other markets, but we're not seeing follow-through, and that was quite a solid bearish market previously, and we were looking for continued bearishness, but with the window coming into play almost down here, we saw very strong price rejection from there. So if we do see the market break out to the downside, we would have to be a little bit cautious about taking that as a signal first off. What I'd like to see is a bearish breakout and then some bearish follow through, perhaps trading down through that 1775 level of support and down through that window. Now, as I've mentioned in big picture terms, a neutral market by trading within the cloud. Technically just a bullish market in the medium term time frame by trading above the Kijun-sen, and we had a bullish breakout above, but we haven't seen any decent follow through. And for confirmation of this signal above the Kijun-sen, I'd like to see the market trading in a bullish manner up above the 1800 level. In terms of the Tenkan-sen, a bullish market in the fast term time frame as well that was established 3 candles ago. So some bullishness in the faster time frames and neutrality in the longer time frame. The Chikou span here is not really confirming what we're seeing in any of those time frames. It's below the corresponding price action, signifying some negative momentum still in the market. So technically a market that does need to make its mind up, and we could then see this market come off once again, trade down through the cloud and perhaps through some of the Ichimoku indicators. So with the Chica span here down below that price action, it does suggest that there is some serious doubt about this bullishness that we're seeing in the faster term timeframes. So moving forward tomorrow, we will be watching this 1800 round number level very keenly. If the trend is going to continue, we'll be looking for strong early bullish activity up above there. But also we will be looking for a potential change of trend to the downside based on the potential reversal pattern. So watching the area down around the 1791 level.